Hey there, wonderful friends. I'm so excited to share that we've just released this week's video showcasing the top 10 markets. A huge thank you for all your support. I truly appreciate it. According to my analysis of the weekly chart and wave count, the American dollar index has been following an impulse pattern since March 2008. Currently, it is anticipated to enter a corrective phase in relation to the advance of wave up, which could manifest as either a simple or double zigzag. We are currently within this zigzag wave pattern. Upon reviewing the daily chart, it appears that wave has completed a larger structure of the impulse pattern. Following this, we've observed another impulse pattern during the bear market, and now we're in a corrective phase. This correction may be sideways, potentially reflecting a 90% retracement of the wave within this pattern or a simple zigzag pattern. Once this correction concludes, we can expect a market advance in the bear trend. An impulse pattern consists of several zigzag formations that complete wave up. Wave B is formed as a simple zigzag, and each wave has similar lengths. Currently, it appears that the first wave has extended. If this correction remains shallow, the remaining two waves of the impulse pattern that complete wave C will likely be shorter than the first wave. The euro is considered against the US dollar, and they typically move inversely to each other. However, we can observe differences in their movements. According to my current analysis, wave has completed at a larger degree, and the euro is following an impulse pattern, where wave exists at a smaller degree. Currently, we are in a corrective phase that appears to be forming a zigzag pattern. After the completion of wave B, we expect to see a similar degree of extension during the bull market. On the 4-hour chart, wave is a triple zigzag, while wave B is a double zigzag. We anticipate further advancement to complete a zigzag pattern during the bear market. For reasons similar to those observed in the DXY market, the first wave seems to follow an impulse pattern, suggesting there could be significant progress. Any correction pattern that falls within the previously mentioned range will confirm the continuation of the process toward the specified targets. Let's examine the market for the US dollar and Japanese yen currency pair. Since October 2011, the dollar has appreciated against the yen. Interestingly, The recent decline of the dollar has not significantly impacted this upward trend. The current market pattern can be interpreted as a zigzag or impulse pattern. However, I view it as a momentum pattern within a bullish market scenario. It's important to note that the first and third waves are equal. If the pattern I've identified holds, it could extend further into this bull market and surpass its previous high. Conversely, if a flat pattern develops, it must be completed within the specified range. Otherwise, we may see a bearish extension that could lead back to the bull market in the form of a double zigzag. To illustrate this better, let's look at the daily chart. I've identified this pattern as a running flat, characterized by 3 waves down, wave up, and 3 waves up, wave B, which has advanced to 138.2% of wave up. A quick hitting pattern followed, leading to these 3 waves. Normal targets must complete a running flat pattern. Exiting the channel can signal a green light to advance toward the specified target. Any type of corrective pattern may occur, but it must end within the specified range for the bull market to continue. We are likely in the final wave of an impulse pattern. After completing the first wave, we should wait for any type of corrective pattern to continue in the rising market. However, it should not extend beyond the beginning of this impulse pattern, and it must be completed within the specified range. We should closely observe the price action to determine the next steps. I started my research at the beginning of March 2022. Based on my observations, after the completion of the first and second waves, we may soon experience the onset of a new cycle, potentially indicating a third wave. The key question is, have we reached the same price level as the first wave, or will there be further progress? I believe that considering the equality of the first and third waves, the extensions of the third wave suggest a high probability of another wave forming, likely equal to the previous 2 waves, unless a sideways corrective pattern occurs in the fourth wave. In that case, we would need to adjust our targets. Upon examining the third wave on the 4-hour chart, I find that it closely resembles the previous waves. We expect to advance in this bull market. The current pattern may be a diagonal leading pattern, or a combination of 1 and 2, and 1 and 2 patterns. Ultimately, after any corrective pattern forms, and we break the peak, we should see price extensions, and reach our established targets. I have a special interest in the Dow Jones market. After examining these, we can consider the third wave. It's important to note that the third wave can also form patterns similar to waves 1 and 2, or even take a diagonal shape. Currently, the first target has been achieved. Progress in the bull market seems promising because the first and third waves are nearly equal, and interestingly, both waves have progressed rapidly. From this perspective, we should view this as one of the 3 waves in the overall pattern. The impulse has an extension, and I believe we are currently experiencing a pattern similar to an expanded diagonal, although there is a possibility it could resemble waves 1 and 2. If a corrective pattern develops without crossing the beginning of this pattern, we will likely see a bull market. The momentum remains until all micro levels are completed, and it does not matter if the market is rising or falling. What's intriguing is that a corrective pattern also has its motivation to reach specific price points and ranges. The second wave exhibited a flat running pattern, while the fourth wave followed a double zigzag periodicity. As I mentioned, the current expanded diagonal pattern can be viewed as three patterns resembling waves 1 and 2. However, I believe the expanded diagonal and any corrective pattern can still be part of a bull market once the extension is completed. The first wave of the gold market follows an impulse pattern, with the third wave exhibiting an extension, and the second wave forming a regular flat pattern. Following the completion of this cycle, we observed the start of another cycle, which I consider to be the third wave. Currently, the price reached by the bull market is equal to that of the first wave. Typically, the third wave is longer than the first wave. However, from the perspective of a classic impulse pattern, a continuation seems quite likely. We find ourselves in the third wave of a larger sequence. I chose the 4-hour chart to analyze the third wave more closely. After the completion of the first and second waves, which consisted of 8 waves, we anticipated the advancement of the third wave. Subsequently, we observed the formation of 3 patterns, 1 and 2, along with the extension of the smaller third wave and a triangle pattern that completed the fourth wave. The formation of the triangle pattern in the fourth wave within commodity markets can potentially lead to the fifth wave, which is typically the longest wave in the overall trend. In conclusion, the fifth wave likely contains an extension, and it is probable that some form of corrective pattern will form. Additionally, a higher wave could be possible in the rising market, based on the indications present on the chart. An understanding of the Elliott Wave Principle necessitates a comprehensive grasp of its patterns, alongside the mastery of its associated rules and guidelines. This knowledge is critical, as it significantly enhances an analyst's ability to interpret price movements across various markets. This insight reflects my perspective as I enter my 4th year of exploration into the realm of Elliott waves. The patterns of the first and second waves are distinctly observable. In my analytical process, I often question whether the current movement represents the third wave, or is simply a continuation of earlier wave patterns, subsequent first and second waves. Furthermore, I consider the extent to which fluctuations in gold prices may influence movements in silver. Upon examining the first wave, I have observed a consistent trend. When gold completes its fifth wave, silver typically experiences significant growth. In your analysis using a 4-hour chart, you observe 2 patterns labeled 1 and 2 following the first and second larger waves. It's important to note that the second wave should not exceed 100% of the first wave, and must remain within the boundaries established by the first wave. To accurately evaluate the expansion of the third wave, I have conducted the necessary calculations to ensure that all established rules are adhered to. This is succeeded by a double zigzag pattern for the completed fourth wave, as the current impulse pattern aims to complete the third wave on a larger scale. Following this, a significant correction pattern is anticipated. Finally, when gold completes the fifth wave in silver is likely to accelerate, as the third wave contains an extension. I will commence the analysis of oil, using the one-day chart. The initial wave exhibits an impulse pattern, characterized by an extended first wave and a fifth wave, that has concluded with a shortening. During the corrective phase, a triple zigzag pattern has formed for wave A, accompanied by a sideways pattern for wave B. It is anticipated that a further triple zigzag pattern will develop to facilitate a reversal within the defined range, ultimately leading to growth in the bull market. Wave W corresponds to a triple zigzag, while wave X is identified as a double zigzag pattern. For wave Y, it is expected that an additional zigzag will occur within the bear market, followed by another wave X, and another zigzag pattern to complete wave C at a higher degree, that follows the conclusion of the second wave. Tesla is categorized within the first and second waves of market movement. Subsequently, an impulse pattern was observed, followed by a correction pattern identified as a running flat. The market is probably poised to advance toward the established price targets. Upon reviewing the impulse pattern on the 1-hour chart, it is noted that this running flat pattern typically concludes between 61.8% and 100% of the A and B waves. Additionally, the current market activity can be interpreted as two distinct patterns, labeled 1 and 2. Following the breach of the market price peak, it is anticipated that a corrective pattern will emerge, which will further extend within the context of a bull market. In the bullish scenario for the Bitcoin market, the daily chart shows an impulse pattern, where waves 1 and 3 are nearly equal, while wave 5 is extended. This occurs after a correction phase characterized by a classic zigzag pattern, where wave it expands diagonally. Currently, we are observing a leading diagonal pattern, consisting of 3 smaller patterns, 1 and 2. Any corrective pattern that forms from this point will likely lead to further advancements in the bull market. When examining the leading diagonal pattern on the 1-hour chart, it appears to have been completed. We expect that after any corrective pattern within the predetermined range, and the subsequent breaking of the price peak of this diagonal leading pattern, we will also witness progress in the bull market. However, it's important to keep in mind that if the analysis indicates a slow movement, the validity of this idea could be compromised. Wishing you every success in the week ahead. Take care and see you soon.